chime into Tamar and Steve, and of course Gino Fronti.
You mean you're going to let me speak?
Yes, yes.
Well, that's nice of you, Don.
You smart aleck.
Release the chains.
Release the Kraken. All right. So the numbers here in Santa Clarita, we're not going to have too much time to go over LA numbers, but so far right now, everybody's wondering, are the values still going down? And we actually, believe it or not, 2 years ago, the numbers really went down quite a bit. I mean, a big chunk in values. And then, believe it or not, the year before last, we're talking 2010, the numbers actually went up in certain areas because everybody was buying up, getting into their first home. We had the tax credit. That was a huge, huge piece because of that tax credit, which we're really hoping they bring back, because the tax credit to help them purchase a home, they got up to $10,000 back depending on what direction they went. And that was a huge range. So actually prices went up a little bit in 2010. Without that tax credit, they've actually gone down, unfortunately, 9.7%. The values have gone down 9.7% in Santa Clarita Valley.
Oh, you know, Don, even though they did go down a little bit, we talked about this a little bit last week, most of that was the beginning of this year was just brutal. When interest rates, and the reason was interest rates had gone up to 5%. And they did that over a 20-day span. They just shot up through the roof, and it made it less affordable.
Actually, that's a good segue, Gino. Mentioning that, the point that what Gino was saying is interest rates went up, therefore people weren't getting into homes because their price, their affordability of buying that home changed. To give you some idea, a lot of people I know we talk to, tomorrow I'm sure you have the same issue, because we feel this is the very best time ever, ever, ever to buy a home since the 1950s.
Absolutely.
And some people are sitting on the fence going, well, I'm going to wait till prices go down lower. Great. But if the interest rates go back up 5%, I did the numbers this morning, Gino. Basically, if the prices went down, let's just say another 5%, because that's what they went down the year before last. We're not going to go down 10% this year. That was an anomaly. I think it may be a couple thousand. And again, it's isolated areas. Steve always mentions that. It's isolated areas. For example, Valencia is only down 8.1%, where Canyon Country is down 10.7%. And then there's pockets of Stevenson Ranch and Valencia and Saugus that aren't even going down at all.
Some are stabilizing, going up in value.
Absolutely.
Holding their own at least.
I mean, tomorrow I'm sure you see it a lot between 250 and 400.
Yeah, and you'd be surprised that even properties in Castaic that are over 700,000, I've had multiple offers on those, and they're selling for above appraised value.
Yeah,
so
we actually had I think a month and a half ago or 2 months ago, a property sell almost $200,000 above appraised value in Tesoro.
Yeah.
Special properties always yield
exactly
a good buyer.
Well, there are multiple offers, and I know you think it's just a buyer's market, but believe it or not, in certain areas, price ranges, there are multiple offers. The key point that I was trying to make is if interest rates go from the low fours, where they've been hovering, which are just ridiculously low, to 5%, believe it or not, even if that home went down 5% on a $400,000 home, went down to 380, and the interest rates went up just to 5%, which is 2% lower than the average. Average interest rates over 200 years is 7%. Believe it or not, your payment would be over $130 more. Even though the value went down, because interest rates went up, you actually lose purchasing power, believe it or not, by waiting.
Yeah, so here's the trick to that. Affordability is a combination of interest rate and loan amount, right? So if you're a cash buyer, then it might behoove you to wait to try to time the bottom. That's always a dangerous strategy anyway. But if you want to, if you're playing that market, if you're an investor, you could try to time the bottom if you're buying the property for cash. But if you're financing, the most important thing is interest rate, especially if you're a first-time home buyer and utilizing a very small down payment. The larger the loan amount, the more important the interest rate.
Well, especially, and if you're renting, we did the numbers. If you're only paying $1,800 a month for rent, believe it or not, in the next 5 years, you're going to pay over $114,000 in rent.
Wow.
And give up a potential net worth of $174,000.
Paying someone else's mortgage, right, Don?
Yeah.
You guys mentioned the tax rate, the tax credit being an issue. In this transaction that we recently put together, we created our own tax credit for those buyers to get them into property through negotiation, successful negotiation with the seller. We created a scenario where the buyer took advantage of the opportunity to have the seller pay some of their closing costs through creative negotiating, which is a key element in today's real estate market, and that's possible. So if you're waiting to buy a piece of property for a tax credit, don't need to. Give us a call.
Good points. Now, Steve Korn, owner of Newhall Escrow. We have Tamar Verrone with the team House Real Estate, and we want to make sure you get this. This is a clip.